Hello, everyone. Good afternoon. I hope that you had a know wonderful time in the markets this week. I'm pretty sure that not everyone did, right? This is due to the fact that we have late CPI this week. So as I said before, um, the days on which CPI falls within the second week of the month, which is always CPI, if that ever changes, we know that something is wrong, right? So every week, right, when there is CPI, which is the second week of the month, there are 3 days, whereas, we usually get our typical CPI. These 3 days on which CPI is scheduled can be used to measure the intensity of the volatility that we will get, right? So the specific rules for CPI are that day before CPI, you do nothing, right? That's what it is. The day before CPI, we will usually have either choppy price action or low probability expansions, which are still tradable. But the rules for you, right, for most of you who are new, and yeah, this is for those who are new and not competent yet, right? The day before CPI, you do nothing. Tomorrow we have CPI, which is Thursday. Due to the fact that it's a late day, what should we expect? We should expect more volatility than what we would expect on either Tuesday or Wednesday. So the day in which we have CPI will cause an effect, on the market's expansion. So Tuesday we will have, regular CPI expansion. If it occurs on Wednesday, then we will have more liquidity being injected into the marketplace. And if it happens on Thursday, then that's very rare, right? We haven't seen this for a few months, I believe, right? CPI occurring on Thursday. So we can expect some big change to occur tomorrow, right? And due to the fact that it's Thursday, I personally will just be waiting for CPI to be released, and I know that it's a pain, right? It used to be a pain for me, it's not anymore, right? Just waiting for something to form, waiting for your setup. These are the times when you should rewatch the old lectures. These are the times that you should be spent in your charts, back testing. These are the times when you should be looking back at your old successful trades, your old backtesting data, where the information that you have learned worked, right? You don't want to be dropped in, fear whenever we have high probability market conditions occurring. So you need to be on your toes. You need to always be in your bag, always be taking note of what's going on in the marketplace. If you're not trading with live data or, back test, if you're not trading with a live account, which you should not be doing like right now, especially right now, right? It's 6:08 p.m. I think I saw someone in the chats posting charts right. No, don't do that. Right. And after Thursday, we have high impact news events as well on Friday. Right. So whatever happens tomorrow, and this is why Fridays are typically, one of the easiest days of the week, right? Because what's Friday's function? Well, 75% of the times, Friday will just return back into the weekly range, right? It might not cover the entire weekly range. Sometimes it does, right? But it will definitely return back. Well, let me not say definitely. That's too cocky. It will more than likely return back into the weekly range, whatever happens, right? Here you can see that and our main focus was the Great British Pound. If you remember clearly, we were aiming for price to expand towards this high, which we're a few pips short of, but I'm confident that price will get there, right? So when price gets here, right, if we see some form of consolidation and then a lower time frame sequential SMT, due to the fact that if this gets here, right, there is a minimal amount of distance between the price action right now of the Great British Pound and this high right here, which was the high of the previous year's quarter. Here for the euro, you can see that we are, in fact, right, close to this high, but we're not too close to this one. So we could see price run above this high, and right, if price stabilizes, right, because we don't just want to see wicks, right? We want to see price stabilize a bit. What is stabilization? Basically, technically, it is just consolidation, right? So here, price stabilized, here, price stabilized, here, price stabilized. After stabilization, which is consolidation, we get manipulation and then distribution, right? So here we can see that price has been in a tight range right here, basically between the high, this high and this low of this candle, respectively. Right, we have liquidity, immense amount of liquidity above this high, which I believe should be the next draw on liquidity. Here, this is definitely the next draw on liquidity for me. Right, we have seen price trade down into this daily fair value gap and then rallied higher. So price here is in what? Price is in premium, but it reacted to this fair value gap. This is something that we'll look at after we, look at the index futures triad. Here, you can see that price traded into this fair value gap, traded above it a small amount, and then it did give a slight amount of reaction, but nothing much. And right, it's the days before CPI, so we do not expect a lot, right? The Great British Pound has reason to be reaching for this high, right? So there will be times when you will just see, for example, the Great British Pound reaching for a high, right? Expanding higher, expanding while the euro is not, expanding while the dollar is not. And the same thing goes for the index futures chart. There are times when you will see the S&P 500 expanding, Nasdaq being stagnant, doing nothing, and the Dow being stagnant and doing nothing. Whenever you have price action like this occur, right, it's a telltale sign that there is manipulation being, foreplayed. The manipulation is on their way, even though it's not visually right depicted in the charts as yet, even though the liquidity has not been taken as yet. So here you can see that we are nowhere close to this low, right? We're literally at this high right here. And this right here is showing you that, a cracking correlation is on the way, right? Highly likely, right? But for this to be, confirmed, if price trades above this high, it's not just price trades above this high, then I short. No, price trades above this high. Okay, we're in conditions, whereas we could see price, return back within the range or whatever. But when price trades above this high, right, if it does, you want to wait for a lower time frame cracking correlation, which would occur between either the within the monthly cycle or the weekly cycle, more preferably the weekly cycle. Whenever you have a two-stage cracking correlation which, hops a cycle, for example, you have a monthly cycle cracking correlation, but then it skips the next cycle, which is the second cycle cracking correlation, skips the weekly cycles cracking correlation and goes to the 90-minute cycle. There you will get, more expansion than, the regular cracking correlation or regular two-stage cracking correlation, which would, basically be sequential SMT on the monthly cycle followed by sequential SMT on the weekly cycle. So still, right, even, I still cannot, not see these highs right here for the US dollar index. So far, you can see that we have been having, right, a lot of choppy price action, right? Literally, no clean price action. It's still readable, right? We are still, on track most of the times, but it is not, easy. And what do I mean by that? I have to be, using, concepts that I, don't really like to be using, right? You like to just look at a chart and it's very easy. I like just knowing what price is going to do right away. So I like to just open a chart and, right, I don't want to be spending more than 30 seconds to a minute trying to decipher what price is going to do. Here, looking at the index futures chart, you can see that we still have expansion going on the way, right? And all of this expansion, where did it came from, right? It all started here, the cracking correlation between the monthly cycle, right? And this is the 4-hour time frame, which is pegged to the monthly cycle, right? So we knew that this was going to happen, right? We talked about it here, then we talked about it here again. So there was no way where we were like, okay, we're going to short here. No. It was all just upwards movement, right? And another thing to, take into consideration is that whenever I say that, I expect price to go higher until I say, okay, no, I expect price to go lower, right? Till I say that, then the bias is just the same. During market conditions like this, whereas we just have price, going higher, right? First of all, these market conditions are dangerous, right? At any moment, right, we could just have price just completely drop, gap, take out everything that happened right here. So if you are in this, trading this, right, take profits, don't, try to hold for price to, go to heaven or whatever, right? Just take profits, sit back, wait for, consolidation. Wait for price to be stagnant, price to, be like this. You see, before this manipulation occurred, and of course, you should know that manipulation only occurs whenever there's a current correlation. So there are times when you will see price just run above a high and it will just continue run above the high, just like here, right? This was not manipulation, right? Why? This was not a cracking correlation, right? This was not sequential SMT, which is why it continued higher. Whenever we have, right, a higher time frame cycle sequential SMT right here, and I believe this was intermarket sequential SMT as well, right? Whenever we have this price action like this, and it just continues to go higher until, right, until we have a immediate lower time frame, cycle in comparison to this sequential SMT, which would, occur on within the daily cycle, then no, sorry about that, within the weekly cycle, due to the fact that this sequential SMT occurred within the monthly cycle, we do not expect a reversal, right? So it's simple to understand. Expansion will continue to happen until there is either, right, a same time frame cycle sequential SMT, such as this. So for this movement, this to be canceled, we either need the monthly time frames or the monthly cycle sequential SMT to occur, right? Or we need it to occur within the weekly cycle. Whenever we have price actions where, as you see, the Dow being totally out of sync from the Nasdaq and the S&P 500, don't pay too much attention to Dow, right? As I've said before, right? You want to have all of your attention here, right? The Dow right now is doing nothing. Well, nothing that makes sense. Imagine trading this, right? Eventually, you went short here, you're going to be taken out. You went long here, you're going to be taken out. You went short here, you're going to be taken out. And if you went long, you're still going to be taken out, right? So you don't want to be paying too much attention to the Dow right now, right? So the Dow, whenever it is out of sync, and this is very important, and this is why I told you to, make sure that you have a pen, make sure that you have, a piece of paper to write on, of course. Whatever the Dow, right, and this one isn't, going to be too long, but it's juicy, right? Whenever the Dow is out of sync with the Nasdaq and the S&P 500, it will send you false signals sometimes. So there'll be times when it will, give you a signal. So it will say, okay, this is SMT. You try to trade it, but it doesn't work. And the same thing goes for the Forex market, right? The FX chart. Sometimes the Great British Pound will give you false signals whenever it's just in range and price action. And there are even times when you will have the Euro give you false signals. But this occurs whenever you have, price just being out of sync, right? And how do you know which one is out of sync, right? It's very easy. When that's the only asset within the triad that's just, doing its own thing. So, for example, right, what would have made the Nasdaq out of sync? If the Nasdaq was doing what the Dow is doing now, and the Dow is following the S&P 500 lockstep, then that's how you would know. Here, right, as you guys remember, we expected the Great British Pound to be drawn to this level right here. So this is the level that we expect. If you remember the last live stream that I did, this is the only thing that I actually pointed to, right? That's just my thing, right? I will have two ideas, but I want to give you the best one, right? So, of course, in the future, right, when everything is more advanced, you're more advanced, we delve into more topics, we'll be, do it more. But for now, this is how, I do it, and, it seems to be working. So, yes, I always give, the highest probability, right? I'm going to say this, okay. And if you realize, I'm going to point to either the daily or the 4-hour time frame. Why? Because on those time frames is, that's where you have the most expansion, for your lower time frame cycles, right? the daily time frame goes hand in hand, right? The daily time frame's levels goes hand in hand with the weekly time frame, which goes hand in hand and is synchronized to the 1 hour time frame, right? So here you can see that we fell below this low, which is not just any low, right? If you look right here, right, and the reason why this is happening right here, where this candle right here is out of sync with, the programming of this level, is because I did not tell the person that made this indicator, basically anything really, right? I didn't go into deep details. They just got this from what? From the YouTube video. But this candle right here is very important, right? So this is the opening candle of Sunday, right? So basically, technically speaking, this is, right, the low of the first quarter. Sunday, the opening price of Sunday, right? That's the opening price of the entire week. That's the opening price of, the week, right? So this low right here, the low of Sunday right here, yes, this is the low of the first quarter. Even though it's not synced right here, it seems to be, like it's a part of Friday, but it's not. This is the beginning of the first quarter, right? This low is important. And what makes this low more important is whenever you have a higher time frame fair value gap, right? In all caps, a higher time frame fair value gap below this low, right? So below this low, if you remember from the previous charts that we looked at, right? This is a fair value gap which caused this reaction right here. So the most important thing is that we had sequential SMT, right? So since we identified that this low was the low of Q1, you can see that in Q2, which was Tuesday, right? We had price take this low out here within the euro. Price did not take this low out, right? What is that? Sequential SMT. Okay, sequential SMT occurred, right? And we're looking at the weekly cycle, which is comprised of days. When do you know when to take this seriously? You already know. Whenever we have a precision swing point occur, right? After the sequential SMT is established, right? So first of all, here we have, what is this? The true week open. Price is below the true week open, is it not? Yes, it is. Price is below the true week open. Then here we had a 1 hour precision swing point, right? So this is a precision swing point right here, right? You can, look at the timestamps, go to your chart, check the euro, and you'll see it, which is what I expect, right? This is a precision swing point. So once this happens, right, it does not need to be the lowest low at all, right? And also, this precision swing point created a cracking correlation as well. Right here, you see this candle right here, 1400 Tuesday 09, which is yesterday, right? Price traded below this candle. In the euro, price did not trade below that candle right there. No, that's not, considered to be, high probability or anything, it doesn't mean anything by itself. But due to the fact that we have this higher time frame level, right? This is the daily fair value gap right here. A daily fair value gap is right here. I just haven't, drawn it on the chart or anything or highlighted the area. But below this low, like literally below this low, is a daily fair value gap. What makes this more high probability is, the fact that this candle right here, which expanded all the way here, this is the opening of the week right here. So what is this? This is a new week opening gap right here. So if we do this, right? So no, this is not the opening of the week, my bad. This is the opening of the week right here, right? So price opened here and expanded. It gapped from here, literally, right? Gapped from here, right? So price closed here on Friday, opened here on Tuesday, then just gapped up. This is what it looks like, right? This is the new week opening gap. So due to the fact that the new week opening gap, right, was the low of the first quarter, that makes this low more reactive, which is why we had expansion here and, price barely did anything right here. Also, the fact that there is a daily fair value gap below this low. Here, also, right? How can you know that, price would expand, right? That's right here, right? The candle, right? The candle which first broke below this low using the 1 hour time frame, right? Which correlates with the weekly cycle, right? This candle right here broke below this low. This one, right? Completed the formation of this gap. Here, you can see that there is a fair value gap here. Over here, we don't have a fair value gap, right? So this is showing you that the Great British Pound is more prone to move. This is also showing you that this inverse fair value gap right here, right? Because it becomes an inverse fair value gap once price broke above it, right? Cutting through all the candles, this is the fair value gap. This is more likely to hold. So, right? Let's say it again. This fair value gap, IFVG, inverse fair value gap, is more likely to hold. Why? Because there's not one here. This is a cracking correlation right here. Because we have a fair value gap here, we don't have one here. Hence, why we expect this one to hold, right? Also, we ran liquidity here. We didn't do it here. It's sequential SMT. Right here, we have a precision swing point, which is a telltale sign of reversals. We flipped this fair value gap, traded higher, and remember that whenever we trade into a fair value gap, and there was a smaller one here, right? Afterwards, you do not expect the next gap to be, filled. You expect it to be left open. So here, we flipped. Here, there was a small fair value gap here. Price traded down into it, expanded about the true week open. And also remember what we stated, that the true opens, right, whenever we have sequential SMT and price trades and price flips the true opens, opening price, it serves as either support, right, in bullish conditions or resistance in bearish conditions. So we flipped, traded down into the true week opening price, traded down into this, then balanced price range. Did not. So this is how this gap was formed right here, right? This is why price didn't come down and overlap with this wick, because of this balanced price range and because of the true open. So price traded into this, And right, remember, we already don't expect, right, any gap that is here to be left, to be filled. Basically, we don't expect this to be filled in the first place. Why? Because price filled this gap. Price filled this gap, expanded. So it's common sense that the balanced price range will be the last resort for price. And it's literally perfect. You can't complain with this, right? It's literally to the tick that price filled this balanced price range. Price filled it and then expanded even higher. Next strong liquidity is this high. So I hope that you found something useful from this, right? If you realize we're getting deeper, we're going deeper, right? But I definitely don't want to give you too much information that has your brain scrambling. So I hope that you spend, the rest of the week, right? Definitely reading price action. Take note of what happens tomorrow, right? If anything interesting happens, I will, come back here and, talk about it, of course. So make sure that you take notes, make sure that you pay attention, and good luck and good trading.